Today in the studio, folks, I got a real treat for you. Brian Covey, what's cracking?
What's happening?
For those of you that don't know this dude, you can find him on social media at the Brian Covey, Covey, pretty simple, or briancovey.com. He's got a book out called Conversations with Covey. He's a big wig in the mortgage business, financial advisor, author, family man, regional at loanDepot, an all-around swell guy.
Like it.
Once an Olympic soccer player. I'll be damned.
True story.
Oh, yeah?
Yeah.
Did you play in the Olympics?
No, I didn't get the final team. Went to Japan that year. I got cut right before the final team.
That sucks.
It's all right.
So now you're in the loan biz.
Yeah.
How long you been doing that?
20 years. Started at the bottom.
What got you into that?
My friends were buying houses. I wanted to buy a house. Had no clue how to do it. Couldn't find anybody that I knew or could connect with. I thought, well, if my friends are buying houses, I like finance. I like people. I could help them buy a house.
I found car sales like a dumbass. Not that it's a bad deal. It's good for boot camp.
Yeah.
It's a great boot camp, get you thick skin, get you involved, but I stayed in it too long. Like I just discovered insurance. Mm-hmm. Holy moly, dude. Financial services. I would have been multimillionaire a long time ago if I would have found that. And I hear mortgage business, same thing.
If you're good, it's the 80-20. The top 20% are doing 80% of the business.
Yeah, but people don't know about it.
That's right. A lot of people don't know.
I didn't know about it.
Don't know how to get into it, right? It's not a career. You don't come out of college or high school and somebody says, hey, you want to get in the mortgage business? Unless you know somebody.
Yeah, that's what I was wondering how you fell into it. Because usually you fall into that shit. You don't just choose it.
100%. So I had played college, and then I went and played professionally. Came back, promised my parents I finished my degree, went to a career fair. A few people in there, financial advisors, insurance sales, all these guys. Nobody would hire me. I had no experience. So like, what are you going to bring to the table? I had nothing other than I'd played a lot of soccer, right? One company there, they said, we'll bring you in. And it was consumer lending, like cars, credit cards, consumer loans, all of that, furniture financing. I was like, cool. They said they would teach me the game, credit, income, assets, all of that. So I started at the very bottom, drove almost an hour away. I lived in Memphis, so I would drive to Mississippi every day. I'll never forget. Ken Ford was my manager and taught me everything about actually how to structure loans, all types of loans.
Where was it?
And it was Wells Fargo in North Mississippi.
Yeah.
Yeah.
So he just taught you the ropes.
Taught me the ropes, came in, and I was literally I call the assistant. Collecting documents, collecting papers. And then I was also on the phone, though. This was interesting. I learned sales on the phone early, as I was the guy having to call people that finance furniture and try to upsell them. They need a credit card. They need to consolidate their debts. They need a mortgage. So that's when I realized my friends were buying houses. I'm like, well, I could just do mortgage and do a lot better, because the other part's hard. Calling people that just bought furniture on 0% financing, you're calling all of them, 100 a day.
Were you around when I think the movie was called Money Game?
I do remember
Moneyball.
Moneyball is yeah.
That was about the financial or the housing crash.
Oh, Too Big to Fail was another big one.
Well, were you around back in those days?
So I started in 2001 is when I got in the game.
Okay, so you were around.
Yep.
So back in those days, it was like really easy to get a loan.
Yeah.
Is that what was happening?
So that was the crash that happened, the 07, 08, everything there is you didn't need income or assets documented. You could state it.
See, no one told me that shit either.
You could get a loan, Brad. Imagine getting a loan on the phone today and you could close in 3 days.
Yeah, see, no one told me that was going on either.
Yeah.
I missed that whole thing. I'd have had 10 houses, 20 houses.
Or you could have been on the other side of it, and the people that lost it all.
I wouldn't have lost it all.
I know you wouldn't have, but plenty of people did.
I would have bought and sold, bought and sold, bought and sold.
Yeah.
The housing market here was crazy, like crazy.
Oh, yeah.
And no one told me about any of that shit. So that's why I want you on the podcast. Some of these members of the bomb squad might be sitting in the same situation I was. So now they need to pay attention, because if you're not making a couple $100,000 a year, or you're making decent money, but you're busting your ass with hard labor.
Yeah.
A loan officer is not hard labor.
It's not. If you can build relationships and you're a student of the game, you can understand products and programs, and you learn how to market yourself, you can make great money.
Yeah,
Great earnings.
And quite frankly, it's important who you fall under, I would imagine, because what about training? Someone's got to be trained.
100%. I would say that is, you look at people that have the same year over year, right? So they get to the 200,000 a year and they're stuck. I know loan officers like that. They never get to 500 or a million because they don't ever grow. They don't scale their team or their business properly. And that's where guys like me come in, is you have to know how to scale those teams. Because if you don't, you're just grinding.
So if I got loan officer listening to me right now and he's doing 200 or below and he's been doing it for a while, what would make them want to jump over to you? And is it even doable?
So it is doable, number one. And I would say the reason they want to join us is the experience. My 20 years, I've scaled teams, not just from sports, but in business. And so we're going to show them how to attract a customer. You have to get to the customer before anybody else does. So we have proven methods with that. But then you also have to retain that customer. Because I believe there's more referrals. It's not a transaction, right? So Brad does business with me. Brad knows 5 or 6 people if I work that relationship correctly. So we teach people how to scale that and how to build their personal brand, which I think is where the business has gone.
Well, you would think mortgage officers, what are they called? Loan officers?
Loan officers, loan consultants.
You would think loan officers would be buddies with realtors.
You would.
Because, again, I had a buddy just buy a $1.9 million house here, and I have a buddy that's a real estate guy, so I just gave it to him.
Yep.
And then that guy said, "Do you know anybody that I can get my mortgage from?" And I said, "Ask the realtor. I don't know."
Right. That's the traditional way. That's how I started.
Could I have gotten some sort of slice of the pie if I'd have had a relationship?
Not compliantly that way, but you could set up. There are ways to set it up. If you had your license or someone on your team had their license, there's ways to do it.
Oh, so you guys can't give kickbacks and bird dogs and commissions?
No.
Why?
Yeah, it's this whole thing that you've got CFPB, right? So they kind of oversee all of that. Can't give kickbacks to realtors even. So let's say a realtor refers customers to me. I'm not paying them for those referrals. That's a quick way to earn yourself into the orange jumpsuit. Not good.
Why is it against the law? That's stupid.
So it's an inducement for someone to come over there, because let's just say that realtor's sending everybody that loan officer. The loan officer's getting paid for that. Now the loan officer's paying the real estate agent. So they want to have fair and equitable shopping. So that customer needs to be able to shop for their services.
Well, the customer doesn't have to take the recommendation.
They don't. That's why most agents will tell you, I've got to refer 3 lenders and all of this. It's kind of an old adage of what they had to do. But that's why you don't get kickbacks just for doing that. But there are compliant ways to set up third-party agreements, right? So there's ways to set that up.
Why do they always try to make things difficult? Like if I was a loan officer and I said, "Hey, dude, any loan you send me, I'm gonna bust you off $5,000."
Yeah.
What do they make on average?
It depends. For most loan officers, they may have like a fixed amount, but they'll probably make anywhere from like 50 to 100 basis points, let's say.
What does that mean?
So let's say you bought a $300,000 house,
Yeah.
$250,000 loan.
Yeah.
They're probably making $2,000 to $3,000.
So 1%?
Yeah.
Is it 1%?
1% base. That's a good rule of thumb, good average.
So someone made 19,000 on my friend?
They could have. Now, those loans could be a little different, because for those to be competitive, many of them, they may have a cap on how much they can earn, 7,000, 10,000, because they want to make sure that they're profitable. Those loans are not as profitable as other loans.
Are those called jumbos?
They are.
Now, what is the rules right now when it comes to buying houses? Is it pretty easy again to get financed?
So I think it is. If you look at credit scores have gone up. If you look at people who have actually saved some money, what's there, programs are still, I think, very favorable. Limited down payments, 3% down, 5% down, depending on what you
Even
make.
on jumbos?
Jumbos, even 5% down on many of them.
No way.
Yeah. You're doing
So I could go buy a $4 million house and put down 5%?
So not on that level. There are some that do exist, but probably not what you would want. Probably around the 10% range is where you'd be on that. And then what I would recommend is compare that 10, 15, 20% down, see what's the best for you. Like, where are you going to put that cash if you didn't put it down versus putting it down, and what would your rate be? So we need to compare those options with you.
What are average rates right now?
Probably 3 is probably the going rate, just a good average.
So I'd pay 3%?
3%.
Well, then I want to borrow 100%.
Yeah. So think about if you did a 15-year, though, or there's ARMs for people that are a little bit more aggressive, right? So you could have a 7-year ARM, so it's fixed for 7 years. Think about that. Then you could drop into the 2s again, and you're paying less interest.
By 1%?
Yeah.
What's the point?
Well, what are you going to do with that extra money that you're putting down?
Go invest it at 20?
There you go.
Like right now, I could get 20% a year on my money.
Where you put it. Yeah.
So if it were me and someone said, "Brad, you can put all the money down on the house or no money down. At 3%, I'll borrow it all.
See, here's what will happen though.
As a matter of fact, I'll borrow 2 times the amount. And then I'll take the other half and I'll go make 20% a year on it.
Yeah. So you'll want to put down something on the home, right? So the 100% programs, you're not going to put that down because that wouldn't be a 3% rate. 5% down, still going to be a little bit higher, right? Because you have mortgage insurance, anything that's less than 20% down. So you got mortgage insurance. So you got to factor all those things in.
What's a payment on a $4 million house?
Well, if you put down your 10% just to make it easy. So
yeah, let's say 20. I'd probably put 20%.
Okay. So you're there. You're probably looking at, depending on your taxes and insurance, 10 grand.
That's it?
Yeah.
Son of a bitch, dude.
Hey, that's why I tell guys, you got to look at what's there and where you want to be.
Yeah,
right?
but like 10 grand a month, you're living in a $4 million crib?
And depending on what your taxes and insurance are, right? So I don't know the tax and insurance here.
Well, it can't be that much.
Can't be that much. You might not put.
But,
them in.
You go to the houses with the $4 million houses neighborhoods. You're thinking they're loaded.
Yeah, they might not be.
Well, they don't have to be if their payment's only 10 G's.
Right.
10 G's a month.
A month,
dude.
Yeah.
Rent is hiking up.
Yeah.
Right now.
Fast, just as fast, almost as appreciation.
And that's also for the renters out there. If you buy a house, there's more opportunity.
Yeah.
Because when we were renting, like, number one, if you have pets, eliminate those.
Yeah.
And then there's not a lot of inventory because not a lot of people didn't want to rent, especially with the COVID shit where they can't kick you out.
Right.
Is that over now?
So it's not over in every state. So they've had some of those. They had the
What about
forbearances.
Nashville?
So Nashville's gone on. We had low forbearance rates to begin with. Most people were making their payments or came out of it and they started making a repayment plan anyway.
But I mean, is it where you don't have to make a payment?
Some are still in those forbearance plans, but it's a very small percentage. Like it's literally between 2 and 3% in most markets that you'll actually see.
Because Nashville is this guy with you? He can come in if he wants, I guess. Nowhere to sit though. All right.
Yeah.
At the end of the day though, like we were looking at Nashville and I don't want to make a commitment. So I said, let's just rent something.
Yeah.
There wasn't a lot to rent.
Not a lot at all.
But there's a lot to buy.
It's a lot to buy.
So I'm going to buy a house. Should I get my mortgage from you guys?
Absolutely.
I wouldn't get it from you though. I'd get it from one of your officers.
One of our local team members there that would go through it and they would know the market.
Why local?
So I think local is the way to go because they know the market's there. They can help you know what's happening around because you want to know where the best restaurants. You may want to know about schools. You may want to know about churches. You want to know about where to go.
I want Franklin.
Yeah, that's where we live.
I already know Franklin.
Yeah, Franklin's
well,
place.
Williamson County.
Yeah,
whatever that is. But Franklin is where my wife wants.
Yeah, that's the spot to be.
And I want a sweet spot.
Yeah, you can get some land.
I want some land.
You can.
I'd have to.
Leapers Fork, right beside where we are. Still get acreage. There's a community.
What's 2 to 4 million get me?
So there's a community down the street, close to the 4 million range. You're talking about 5 acres, and you're probably getting about a 7,000 square foot house.
Nice.
Custom built.
No shit.
Yeah.
I'll get a hold of you.
Good.
So people listening, they're a loan officer.
Yeah.
They're happy where they're at. What don't they know? Like, in other words, because I always see people, they think they're happy, but that's because they don't know any better.
Yeah.
What's the average LO out there doing that they don't even understand they're missing?
I've seen the shift direct to consumers. Consumers are bypassing the real estate agents probably more than half the time, and they're shopping online. And so many loan officers today have no personal brand. If they were to look Nashville loan officer, Nashville mortgage, they're not showing up. Mm-hmm. So here's what happens. You're at a table. You may be the best loan officer there at structuring deals. You may have the best price. The problem is if you can't earn a seat at the table by showing up online, most loan officers have not built their personal brand to show up where the customers are showing up, which is they start online.
Yeah. Before
they call the real estate agent, right? Like your friend that you mentioned earlier.
Yeah.
They probably went online and they looked for how much is my payment? Just like you're thinking about. They're going to look for payment. They're going to look at neighborhoods.
Yeah, but they're going to find loanDepot.
They will absolutely find loanDepot.
What happens when loanDepot gets that lead and we
give that to our local team. So that's what is
it depends on where you're looking.
Correct.
So if I'm in Nevada, they're going to give me a Nevada person.
Correct.
What if I'm in Nevada looking at Tennessee?
You would have put that information in there. If it came into the Nevada team and they found out you're buying in Nashville, that's the benefit of us being in all states is we'll refer that to someone local across the country. Who gets
it? Round robin?
No. So it'll come to the local team. There's certain ones that are trained on these leads because the leads come in different. They're not a warm referral from your best real estate agent or your best friend. So we've trained them how to bring those leads in, build a relationship over the phone.
To me, it doesn't make any sense because if I need a loan, I need a loan.
Yeah.
Like, what do I care about the loan officer? I don't care. Like right now I say, hey, I like that house. Where do I get a loan?
Yeah.
So anybody will do.
Really?
Why not?
So
what do they do?
So
what's so special? Do they get me a freaking Harry and David basket or like what?
They might get you a nice closing gift, but here's what you want.
Aren't all the programs the same though?
No. So you want somebody that we say is like a modern mortgage professional, meaning the fact that they would slow down and listen to what are your short-term, long-term goals? What are you trying to do? Are you trying to buy another house? Do you have investment properties? Do you want to invest? Like you're wanting to invest your money. You want a low down payment. You're conscious about your monthly payment, just listening to what you've shared, right? So I need to curtail that and give you the right options. And I could show you options. If you go online and you just work with an online lender, they're probably just going to spit out to you, hey, here's 10% down. Here's 20% down. Well, what if I showed you options that were 10% down, but you didn't have to pay mortgage insurance? Now I showed you a way to do that. What if I showed you a 7-year arm?
What, is mortgage insurance expensive?
It is. And it can be especially on the size house you're talking about. That starts to add into your payment, and that is not any tax savings whatsoever.
But what kind of difference?
So if you did a 10% down, and you probably have a 0.5% higher in either rate or monthly payment, you could be adding several $100s to your payment in what they call just monthly mortgage insurance. They won't drop off till you get below 80. So you don't want to deal with those. Are the things you want to expert to show you options. And again, I say, you may think you know all the options, but what if I presented one you hadn't thought about? And now you're like, oh, I like that.
If I bought a house cash, 90 days later refied, how much can I refi? You
could pull out. Actually, we'll do the same as cash. It's one of those programs that allow you, if you paid cash in those 90 days, come back, get a loan against it.
But what happens? But how much of a loan?
Depends on, most people will come back and they don't borrow high LTV. The norm will be around 80% is what you see.
How do you know what a house is worth?
So we use appraisers, or there's now the online valuation tools that we have. So we have enough AI, like artificial intelligence tells us enough home sale data. We have all that. So if it comes back, it will tell us in our system, did we get a property inspection waiver? Which for us is wonderful. Because that means I don't charge you for an appraisal. I know your value. Like, here we go. And typically it's right there with what you would have gotten on appraisal.
Because my only fear would be overpaying for a house. Because right now, especially in this market, everybody wants an arm and a leg for everything.
And there are still markets people are paying more than the list price, right? Because they want that house.
Yeah, this guy I referred here, he said okay on a couple of houses.
Right.
They wanted more. And I'm like, well, why would you list it for that if that's not a deal?
Yeah.
But literally someone else bought it for a little bit more, and someone just kept offering more.
Yeah.
So somehow he got this last one, and they got it all dialed in, approved. But still, like right now in this almost bull market,
people are still overpaying because they want it. But
what happens when the market corrects?
What happens when it does slow down? Last year was almost 20%.
Slow down, you say?
Slow down.
What about crash?
I think that's debatable right now, of crashing versus what we saw before versus now. I think we see a slowdown of 20% appreciation, not sustainable, right? 2020, 2020. Think about the demand was there, though. We all got to work from home. Nobody was traveling anymore. So your home became more of like, I'm here. If I don't have a nice kitchen, I don't have a nice place to work. If my kids are doing school from home, I'm moving. Right? That was the demand that got created. So people were willing to pay more. And we just basically drove it up.
What about property taxes?
So it depends on where you live. Nashville's phenomenal for this, by the way. It's around like 1%. If you go to anywhere else, let's say you go to California, right? Just use that as a good example. Significantly more, right? So you want to know your property taxes, because today where people can work remotely, maybe what you buy in Nashville, just because you can buy more, but factor your property taxes in. Because even if you pay off the mortgage, guess what? You still have homeowners insurance and taxes. They don't go away. Pay cash, you still got to pay those. So Nashville, I think that's why Nashville's exploded the way it has. Property taxes are still, relative to all the other markets, still low.
Plus, I think that's going to be a market that grows regardless.
Yeah. How
are the bullshit mask rules down there?
Oh, they're gone.
All of them?
So we had last week was very interesting. On Friday, we got a note that masks were eliminated, right, in schools. Got 3 kids in school. And then last night, we got a quick reminder that, they're back. So there's a little bit of juggling, but it is moving quickly to, if you go to a restaurant or like our gym, there are no masks. There's no requirements.
Schools, most importantly, though.
Schools the most important. The big step we just had, though, Bridgestone, which is our big arena downtown you've seen, they just went to where no more required to have vaccination proof, right? And then no more on having to have that negative test. We just went to a concert a couple weeks ago. You had to have one of the two. 72 hours, clear test, or you had proof of vaccination. So now it's moved in a week.
No more.
Or our numbers are down.
Yeah. Well, everybody's is.
Right. So,
yeah. Do you think? Well, we don't want to talk about it. We'll get the episode suppressed.
Oh, they'll kill us. Right?
But to me, it's like, dude, what a scam. All that bullshit.
Yeah.
Have you ever gotten COVID?
I did.
See, I didn't.
And let me tell you, Brad, it was not. So I'm pretty healthy, I would say, right?
Yeah.
But it was literally a day and a half. Didn't feel great. Was it worse than cold or strep? No, I can't.
Yeah, but maybe that's what it was. Maybe you had the flu and you didn't even know it.
Who knows? Because did it feel a little different? I don't know. I was tired. I rested it off. Took some medicine. I was working out the next day, not at full pace.
At the gym with no mask, you bastard.
I got my home gym because I have an assault bike and a rower, like a little CrossFit setup. So no, I did my house because I'm not going to stop. I'm not going to lay in my bed all day.
Did you have a hard time breathing?
A little bit. Yeah. So that's why I was like, maybe it was the COVID.
Yeah.
Maybe it was.
Maybe it was.
I lived.
So your book, Conversations with Covey, I assume it's about mortgage business?
It is not.
What's it about?
There's one chapter that is. So I took my podcast and the 10 guests that had the most engagement, people that they drop bombs, right? Some amazing guests. And if you were to take all of their wisdom and all their insights, all of them were able to share that. And they all had stories. They had overcome adversity. So it made us relatable to realize, like, you may see someone very successful today. You don't know the shit they've been through.
Yeah.
You do not know. And they opened up to share some of that. So you would understand that, hey, we're a lot more alike than we're not. And then they actually gave you what were their life lessons. So imagine getting 10 of very successful, from the Shark Tank to Jerry Maguire was filled after Meltzer. Bert was in there, right? Like, we pulled in some great people.
You haven't had me.
Well, that's why I'm here.
And I'm the author of The Hard Way.
Which is pretty awesome.
Which is lessons I've learned the hard way.
So you'll relate to that one because your lessons that are in there, that's it.
That's your podcast, The Brian Covey Show?
It is.
Wherever podcasts are?
Yeah.
Do you have it on a YouTube channel too?
We're on YouTube as well, but we do mostly Apple is where most people typically find it.
Yeah. What's your YouTube channel?
Brian Covey.
Believe it or not, you want to focus on that, bro.
That's what I've learned. That is the game. I found a hole that we're working on that now.
YouTube is the backbone of all of them. I don't care what anyone says. Like, because here's my theory. I don't go to Instagram and search for how to.
Right.
I do YouTube.
That's right.
So when you're posting everything on Instagram where you're hoping people find you and it's organic and yada, 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 that's good. But everything you post up to YouTube, number one, gets your rank better. Number two, I could type into Google, not even YouTube, how to buy a house or how to get a loan. And dude, if your shit's all over YouTube correctly, your videos are coming up.
That's right.
And then they see you and then they go buy your business, buy your services.
Yep.
So anyone that's not on YouTube that comes through here, because as you know, we market courses for people. I tell them, go start your YouTube channel, start putting everything on YouTube, everything. Your podcast needs to go on YouTube. Matter of fact, you should make it for YouTube, which is why I have these cameras now.
All the different ones.
Yeah, when I started this, it was just audio.
Yeah.
But I'm found on YouTube a lot.
See, that's what we're...
More people listen on iTunes, but they find you on YouTube.
That's right, because the search, to your point, that's how they find you.
Because they're searching how to buy a house, how to sell a car, how to sell something, how to close deals, how to anything.
Yeah.
And then they find your ass.
Yeah.
And then underneath you put your little entry points, your little links, your little pages. Dude, it's freaking nonstop.
Start pulling them in.
Yeah, I don't know if you're an expert at that, but I can show you how to do it, especially if you're a VT customer.
Right.
You got to use Lightspeed.
I think we're going to figure that out,
Then
too.
we help you.
That's right.
So the podcast, how long you've had that?
Started right before COVID, so January. So that's almost 2 years.
How'd you get all those big names quick?
Network. So that's the 20 years. That's probably one of my superpowers that I've enjoyed is connect, do people right, treat people well, help them, add value. And then it's funny how people will introduce you to someone else that's really cool. And you're like, great, here's what I'm trying to do. Here's the value. And don't ask for things in return.
Yeah.
Yeah.
So the book, the first chapter is about mortgage. What's the rest of it? About growth mindset, art of winning, just stories and lessons?
It is. It's stories from each of the guests that we pulled out. So if you were to get almost like a mini 5-minute just TED Talk version of, instead of having to listen, most people don't, let's just say if you don't listen to podcasts, maybe you read books. So if I don't have an audience listen to a podcast audio, I want to give them something in their hand. And that was also deliverable, right? So I could hand it. So it's every guest just broken down. You could read 1 chapter. You could read 5 chapters. You may relate to someone in the book. You may know them. you may have new people in there.
But I mean, overall, what category is the book in? Self-help, entrepreneur?
Yeah, personal development is what I would put it in. We ranked really high in inspiration. We actually fell into that one because the stories connected with people, and I would get messages about, wow, I relate to that. I've been through that before, right? And that's how it connected. Then they listened to what the lessons were.
Did you have you didn't have a rough upbringing?
I wouldn't say rough. No, I traveled playing soccer. Like, you know,
I was going to say, like, you're from a Beaver Cleaver family.
I'm from Memphis. I wouldn't say Beaver Cleaver.
Are your parents still together?
They are.
See, that's Beaver Cleaver, son.
Yeah.
That's not a bad thing.
No.
Everybody thinks you don't have to be from a broken home to be cool.
That's right.
I would prefer if I was from a Beaver Cleaver family. Always wished I was, just wasn't.
Yeah.
But, you know, broken homes and shit, that don't stop you.
At all.
Makes the story a little bit better, though.
Yeah.
You ever hear them? You know, oh man, I used to get beat as a kid, and my parents divorced, and my mom was an alcoholic, and my dad was this, and they're terrible stories. But Beaver Cleaver, that's where, you know, your parents bought you your first car?
No.
No?
No.
Your parents paid for your college?
No, I had scholarship for soccer.
Oh, okay.
But I did have this. My dad was a psychologist and also a pastor. So I do tell everybody, like, two things important to me, mindset and my faith.
What kind of pastor?
So he was Methodist.
Now, well, I won't bring it up because I've already done it too many episodes. I always ask people, what's the name of Jesus? Do you know his name?
I've heard you bring this up before.
Yeah. So do you know his name?
Let's see.
Yahshua.
Yeah.
Yeah. Not Jesus.
Yeah. And if you look back, so I was fortunate to have that upbringing to ask a lot of questions. I wasn't saved till I was 18. I was that kid with a lot of questions, but I had somebody that was there who's like,
your dad.
Yeah.
Yeah.
My dad. And I tell her it's a great upbringing to have that, but also from the sports side, like the mindset piece, and you combine those together, it's a huge part of who I am.
Now, I said, are you related to Stephen Covey? You said somewhere, but they're the Mormon side.
Covey. Yeah, they pronounce it Covey. So you got
Covey.
Franklin Covey, Stephen Covey, and all that side, and they were typically out.
Are you related?
My dad's side of the family is. Yeah.
But then
not directly at all.
They're Mormons, and they didn't want to be related, so they changed the pronunciation of their name.
So we're Covey. I've been called Covey majority of my life from somebody, right? Because it's just, they think about Covey, one of those. And I think that's a common misconception. But hey, I'll be put in that company.
Yeah, that's good.
7 Habits, 8 Habits. Come on, like, I would be glad, be an honor.
Yeah.
Right?
Have you ever met them?
Nope.
No?
I didn't.
Never went to their courses or anything?
So I read the books. I kind of grew up on that was there, but I never got to meet him or anything there. Like, that wasn't. I was younger, and then when he passed, I never got a chance to meet him.
Huh.
Would have been cool though.
Is your dad still a psychologist?
He is.
Practicing?
He is.
Like a Jordan B. Peterson?
Oh, a little different. So my dad
Isn't he a psychologist?
He is. Yeah. Yeah.
What's the difference between a psychologist and a psychiatrist?
Psychiatrist does the medicine side. Yeah.
One can prescribe, one can't.
Correct.
I'm getting Jordan Peterson on the podcast.
Pretty awesome.
I'm pretty interested in that.
He's an interesting dude.
Maybe I'll get your dad. I want a psychologist to ask, mentally, how likely is it people literally stop themselves from succeeding?
Ooh, that's a good question.
I think it's everything.
I think it is everything. Think about just decisions you make every day, choices you make. You say, I'm going to do this or not that. Well, what if it worked? Too many people say, no, that's not for me. That's not going to work for me. Really?
Well, have you ever read Cybernetics? No, Cyber Psychonetics? No, Cybernetics.
I've checked. No, I haven't read it.
Yeah, it was a plastic surgeon who wrote it. And ultimately it shows that it's almost impossible to outperform your own self-image. And everyone has a self-image. We're not really aware of it, but we have one.
Yeah.
And if we don't think we're worth anything or deserve anything, you can spend your whole life trying and not even being aware, and you'll never get anywhere.
That's right.
So this book, I highly recommend everyone go read, including yourself. Cybernetics by Maxwell Maltz.
Okay.
Maxwell Maltz. It's an unbelievable book. It's all based on psychology. That's why I want a psychologist in here.
Be a different perspective.
Maybe I'll get your pops on here. Would he do it?
Hey, who knows, man? He's different. So, he's in his late 70s, so he'd be a different one than Jordan.
Yeah, but I'd love to hear people's opinions, especially I like listening to older people.
I would say he's got a lot of wisdom, and then the faith-based side of he'd bring in It'd be good.
That'd be a good one.
Yeah, you need that.
Yeah.
We'll bring him out here. He needs to travel to Vegas.
Hey, so if I'm in the mortgage business listening to this and I say, listen, I like this dude, how do they get a hold of you? Just DM you?
Yeah, just DM me. I have a lot of folks that will connect up just through Instagram and that or LinkedIn.
At the Brian Covey.
Yeah, somebody took Brian Covey.
But I mean, is there like cross recruiting and these ship jumpers in the industry? Is that rampant?
Rampant. Right now, people are jumping for a check versus the career, right? So we're looking for committed, career-minded people that we can grow.
Why do people jump so much?
Money. They think it's better on the other side. Oh, you have better pricing. Oh, your speed is faster. Oh, you have this. It's like that shiny, flashy object syndrome. They think, oh, if I go there, it's going to fix all my problems. When the reality is, maybe it's something in the system or how we're approaching our business that we can all learn from.
Yeah.
Right?
Well, why would someone jump to you?
So with our group, here's what we've done is that local hybrid mixed with the online where we know customers start. We've blended those two together better than anybody. And I'll just say we've piggybacked off a little bit what Rocket's done. It's no surprise. First lender in a long time, double-digit market share. So if you're joining us, you get the big brand, but you get the entrepreneurship of you get to build your brand. So if you want to be part of a big, fast-growing company that has the best our own tech and you want to grow your career, I would join us. You want to be a loan officer the rest of your life and just do the same thing over and over, stay where you're at. Don't join us.
Why not build an agency, a brokerage? You
could build an entire team with us, right? And that's what we've done is if you want to build a team, that's the route many want to go. Scale it.
What has Albert Preciado done?
So
he has the mortgage guys.
He does. So
is that his own brokerage?
That is. That's the best way to think of it.
So can anyone do that?
Could they? Yes. Could they do it to the level Albert has? It's hard work. You have to go through many, many years of building out to do enough volume to get certain programs and the right pricing and warehouse lines. And there's a lot more to doing it than just mortgage. Albert would tell you, like, you got to understand how to, I've got money going out, but I have warehouse lines. I got to pay people. Like, how does all that work? It's not just mortgages anymore. At that point, you've got to be a true business operator, in my opinion. You got to understand how to do that and scale it. So he's trying to scale that, right?
Well, he wants to be a bank eventually.
And he'll have to do enough volume and he'll have to go through all of the accreditations to do that side of it, which is a whole other animal. There's different vehicles in the mortgage space too. So I always say, find what you're great at and doing more of that.
How much money can a dude make on average in the loan officer space?
Last couple of years, a lot more. But when you were talking about earlier, 250, 500, if they're really good.
Do you think that's going to end soon?
I think it's already started to end, and you're going to see loan officers that don't have a model built. They don't know how to get to the customer first. They don't know how to create repeat referrals, and they're very transactional, meaning I'm going to do your loan, and I'm just going to let you go. Like maybe I gave you fast service, good rates, but they don't know how to actually build a business. They don't know how to build relationships with agents and to build their personal brand online. That's a foundational piece today. If they can't build that, they're going to be stuck. They're going to be waking up every month, starting over.
So what if they build a huge personal brand and wouldn't they become their own Rocket or loanDepot?
They could. So here's where I'm disrupting the industry, I believe, is I've joined what I believe is the best company as far as technology, what we offer, the culture, and our CEO. I love his leadership and guidance. I don't want to take on all that and build a $100 billion team. It's not what I want to do. But I do want to build $10 billion, $20 billion team under that umbrella and give people opportunities on my team to grow and scale their teams.
I know, but let's say I was a master at personal branding.
Yeah.
And all of a sudden, everybody's heard about me. Like Brad Lee, the mortgage G.
Yeah. There you go.
You know?
Got your tagline.
Yeah. So now all of a sudden, everybody and their dog's hitting me up.
Yeah.
Isn't that a loanDepot? Like the reason loanDepot is so big is because everybody's heard about them and everybody just goes to their website and types in their info.
That's really, and we've also, but here's the difference. We've also.
That's marketing though.
That is marketing, but we've also allowed our local loan officers and people like myself in leadership roles, unlike any other place I've seen, they let me go out and brand us as well. So now you have Major League Baseball sponsorships, national commercials, and guys like me getting on Instagram, getting on LinkedIn, building a brand. So they see loanDepot, they go, oh, I know Brian. Oh, Brian's at loanDepot. I mean, Brad, the amount of referrals I get, I don't originate anymore. But they go, I like Brian. Brian's at loanDepot. He can do my loan. The reality is I don't do the loan, right? Our team does. So we've proven the concept. Now we're just trying to bring more people along for that ride.
What about like influencers that have followings? Could they get their license and just leverage that following to make a shit ton?
They could. They'd have to figure out how are you gonna partner that up with a loanDepot? Are you gonna partner that up with a local brokerage? Like there's avenues for it though. But I think that's where the game has changed is if you can get the consumer's attention, but then you got to be able to deliver the product and experience, right? Because if they go have a crappy experience, guess what happens to your brand and online? Like,
yeah, it wouldn't be going well.
Not gonna go well.
But I guess I'm not familiar enough with the mortgage space. What's a crappy experience? Like it's either you get the money or you don't.
No, so not closing on time, lack of communication. Let's say you decide to work with me and ask you for documents up front, but then I ask you 3 more times for the same documents. You're gonna be pissed.
I'd say I already gave them to you.
Right. You're like, I don't want to do that anymore. Well, then we miss closing date, and then you're frustrated. Then your agent's mad. Let's just say I didn't offer you the best program, and you found out down the street talking to one of your buddies, hey, well, why didn't I get that rate? Why didn't I get this program offered? That bad experience can stem from a lot. Usually it's communication up front. How long is this going to take? When are you going to communicate with me? When's my closing date? A lot happens in our business that doesn't happen on time. That's what our industry, unfortunately, is known for, that we're trying to change.
Are you worried about Zillow getting into the mortgage game?
Not worried, no. But I think they will. I think Amazon might at some point. Why wouldn't they? They've got the iBuyer piece, right? That they got a little bit ahead of themselves on that piece. But the iBuyer is not going away.
Because you got, in my opinion, you got 2 types of buyers. One that found a house and now wants a loan. Yeah. And 2, one that is gonna start looking for a house.
Right.
There's only 2 types, right? So if I'm on Zillow searching houses and I see one that's awesome, I hit the button and it says, click here to apply. I click it. It processes me, says, boom, you've been approved for this house. Click here to accept terms.
Yeah.
And I click it. Didn't I just buy a house and get a loan right through Zillow?
That's where it's going. Today they have third parties like us.
I think it's going that way myself.
Oh,
and AI.
Agreed. I think
AI could determine all the best packages better than any human being.
Anybody. So imagine your phone, all the data you have on. I think there's going to be a time in the near future here that your phone will actually be able to go to a house, you click on it, it's going to show you how much you're approved for. You can show that realtor that instead of a pre-approval letter, or the sellers will be there. But we still got to solve for this problem of some people need to sell their home before they can buy a new home.
They obviously factor in debt to income.
Absolutely.
So what happens when you get these slick business owners that are showing themselves making $120 a year because, they don't make any money, so they don't have to pay any taxes?
Yeah.
So how do they get qualified for these big-ass houses?
So there's 2 different ways. One, if they go the standard way on the programs, we're actually going to use what they file with the IRS, right? That's the income we have to use. So if they have a ton of deductions, we're only going to be able to use the income that they actually are claiming there, right? But there are other programs that exist out there still that will use like business cash flow. We can use their bank statements and cash flow. So that's why, again, when you mentioned earlier, a mortgage is easy. It's not always easy. The reality is it's complex when you start getting somebody that has more complexities, right? Let's say you own multiple businesses. You have K1s. Not every loan officer knows how to calculate that and put you in the right program. It could be the difference between you putting down 10%, 20%, 5% rate, 3% rate. All of that matters.
Well, I'm going to be buying 4 houses, more than likely.
I think you should.
In 2022. Maybe 2023. Definitely 1 or 2 in 2022.
Yeah.
So I'll get a hold of you. Yeah, one's in Nashville.
Good.
Franklin. I just got to find a house. And again, before I was looking to rent one. Now I'm kind of thinking, okay, I'll buy one.
Buy there.
But I got a realtor buddy down there. Oh, Good Time Tommy.
Oh, yeah.
You know Good Time Tommy?
Of course I do. How can you not in Nashville?
Do you refer him?
We do.
So I'll probably use Good Time Tommy just for shits and giggles.
You should.
And then I'll use you
for package it up, I'll say.
My mortgage.
Yeah.
Or would he be telling me, no, y'all got to use so-and-so and so-and-so.
Yeah. We're part of his team. We're trying to work our way a little further into that, just like with every top-performing real estate team. We want to be their number one.
Why aren't you?
That's a good question. I'll have to ask him when I get back.
I'll ask him here in a minute.
We'll call him in a minute and say, hey, how do we get to be number one?
Well, you would think, I would assume all deals are pretty much the same.
No.
Well, I didn't know until I talked to you.
See?
I wouldn't have known. Personally, I thought you just fill it out and you are what you are and your credit is what it is, and all the banks fight.
And they're all like, we want you.
They'll fight and say, I'll give them 2%, I'll give them 1.8%, and then it's like the best. Here's the 5 best offers you got, and then you pick one. Isn't that like a lending tree or something?
That is, and that's where some people go. We try to compete in that space as well to get them to call us, because what we believe is once we talk to that customer, we're going to differentiate why we're not just an online lender, right? So they call us, then that's our chance to win them over. Still got to have a relationship, I think. Some people are okay doing the online only.
Do you ever do loans yourself?
I don't anymore.
So I'm going to have to talk to some lackey.
No, not a lackey. No, we don't have lackeys on our team. You get the VIP route. We'll make sure. We've got amazing people. I'll say Nashville's been one of our best markets.
Do they have NDAs?
You know,
because don't you have to divulge everything to these people?
well, yeah, they've on that piece they can't share your information. Yes, but I was trying to think of like they don't have a formal but they can't disclose your information with anyone. Like not even to Tommy.
But like the celebrity net worths on the internet.
Oh, that's not from us.
Show me like $90 million. I'm like, I'll let them believe that.
Let them say, yes.
Yeah, I'm like, damn, that's pretty good.
Yeah,
they're wrong, but they're pretty good. Of course, are they factoring in equity in companies? I don't know how they factor that shit. It doesn't say 90 million; it says 9 million. But still, in my opinion, I don't want a bunch of factual business out about who's making what.
Correct.
They can't.
We don't share that information. That's not from us. No. Now,
you don't sell the information?
No, we don't, because we still service our loans, right? So there's a lot of stuff that we keep in house, but you can't sell that information off unless they've actually had you sign off on that.
I know, but when you're signing all that shit, you never know what you're signing. I know that I get hit up all the time from a million people anytime I do anything.
When you go online,
I buy a domain, I get hit up by 75 different people. You know, hey, are you the owner of this domain? We got this service, and I'm thinking, how do they know this shit? So now I got to buy domain protection and privacy. Yeah, I want privacy with my loan. I don't want no one calling me.
See, so now we've identified your needs. We're just going through. This is good. We know.
Yeah, well, if I didn't know it was such a
little more complex,
complicated service.
That's why we're together.
Yeah,
well, we're bringing light to this for everybody else listening too. Who thinks a loan is a loan is a loan. That's why you should call us.
But why is loanDepot any different than Rocket?
So with us, we have the local experts, which I believe is different because if I'm in the market, I understand what's happening in the market. I know your agent. And also think about this. If you have a question, you know where I am. I'm in the community. I have more of the skin in the game than somebody that's in Michigan, let's just say.
Yeah.
They don't care what you're doing in Nashville. They're not going to bump into you in the grocery store.
So does it go both ways? Will they hook me up with a realtor if I didn't have one?
We can, yeah. So we have a network of realtors, and they typically will be those higher echelon that they've signed up to receive those referrals because we got to make sure they've been in the business long enough. They've got great reputation.
Is it smarter to get pre-approved before you go hunting?
Always.
Because you could probably fall in love with let's say I find a house and it's like, $600,000 and they go, sorry, dude, you don't qualify for $600,000.
Can you imagine going out and falling in love with the house? Let's just say you're out there with your spouse and they fall in love with the house, even worse. So we say, absolutely get pre-approved, know what you can buy.
Yeah. And
don't just do it online and fill out a form and think you're approved. Talk to somebody, have them actually have an underwriter look at it.
Get all the way approved.
So
and they'll tell you, like, Brad, if they went through all my shit, they'd say, Brad, the based on your down payment, of course.
Right.
This is the most you can buy.
That's right.
Period. And they don't bump it for any reason.
They don't need to bump it on those. So what's been happening lately is people are trying to overbid on the houses. They should understand that market as a buyer. You should know if I overbid, I'm bringing the cash of the difference. Because let's say it didn't appraise for what I overpaid. We have to educate customers to make sure they know that.
Yeah, because no bank's going to loan on the overvalue
sales
of the
price.
house.
No, of course not.
Yeah, so now you better come up with some extra cash.
We've been doing a lot of education on that. Yeah.
So the difference would literally be part of the down payment.
Correct. Be extra cash out of the pocket.
Huh. You got a big old fancy house down there?
I wouldn't say it's big and fancy, but we love it.
Why?
Oh, for us, in our neighborhood, we got a half acre. We just built a pool and added a pavilion, so it's enough for our 3 kids. They have friends over. To me, it's fun. We have my family's in the neighborhood.
Does it get humid down there?
It does.
Any tornadoes or anything crazy?
Some. We're right over a hill. So if the tornado came over, it's got to get over the hill and come down. So I have a little protection. But there's tornadoes in Nashville, unfortunately.
In Franklin?
I haven't been hit by one.
But like if I'm going to buy in Nashville, is Franklin the best?
Yeah.
Or Brentwood?
I go Franklin.
Why Franklin over Brentwood?
We like it there. Just our personal preference. Downtown Franklin's a nice kind of quaint town. You got the arts, you got a lot of music, great restaurants, schools, all of that there. We've loved it. And then you can also just cut with the interstates and everything happening. There's tons to do. Our kids play soccer, so I'm right by soccer fields too. So there's plenty to do.
Yeah. It's a little rural, Franklin.
It is. We're across from a farm.
Yeah, I like Brentwood, I think, best, but my wife trumps my decision.
That was our battle.
Yeah, I say whatever. Like, I just go there and sleep. No big deal.
That's where I landed.
I let her be happy. She can pick. She says Franklin. So I'm going to be moving to Franklin, buddy. We're going to be neighbors. But I won't be moving there permanently.
It's okay.
I'm getting 4 houses, and I'm going to live at one of them whenever.
When you're in Franklin.
I'll be down there. I'll be down there when it gets hot as hell here.
Yeah.
Like soon as, let's say, June, I'm probably going down there. Now, but the humidity there and the heat there is pretty bad too, isn't it?
It's hot.
Hot?
It's not like Vegas hot, but it's humid. It's
Can
probably
you,
going to be the
can you
biggest
go
difference.
outside and play in the park?
Absolutely. Yeah, our kids still play sports outside, soccer.
Yeah, because here you cannot.
Correct. I'll say that's the difference. You're going to have probably a 20 to 30 degree difference of what it feels like, but the humidity is going to be different for you.
You get used to it though, don't you?
Used to it. Yeah.
Yeah, you get used to that shit.
Yeah.
And then a lake house, a beach house, and a house here.
See, that's the way.
Right now I'm just renting.
See.
And I'm renting enough for a $4 million house. But I think mine's only like $2 million.
Yeah.
People are like, "You rent, Brad? You rent?" Yeah, I rent. I don't want to be locked down.
Yeah.
I was worried about the tumultuous, but I've screwed up. Now watch. I'll finally say screw it, I'm going to buy, and then that fucking market's going to crash.
It's going to level off. We're not going back.
Well, dude, I watched what happened here to all my friends who owned houses. House appraised at 1.2. Like next thing you know, dude, the house is worth $600,000.
Right. Quick.
It seemed like this, and then they owed 1.2 on a house worth $600,000.
Yeah.
It's like, what do you do then?
Yeah.
Other than just pay for a house.
Just keep paying.
Well, a lot of people couldn't and didn't.
Correct.
And then you're dicked.
Yeah.
Now, what if people have bankruptcies?
So we still work with them. There's rules getting out of bankruptcy. How many years?
What is the one thing? Oh, you ain't getting a loan if that's the case.
Well, if you're still in bankruptcy, that's not good. They're not going to let you go buy a house, right? We don't have as many short sales as we had after the last recession. When you looked at what happened in like 07, 08, that was a lot of people that didn't foreclose, but they did short sales. So they had to wait. Some of them had to wait 3, 5, 7 years to come back and actually purchase again. So that was something tough. Here's what I'd say. We have a lot of self-employed people out there now, like this entrepreneurial kind of wave.
Mm-hmm.
Make sure if you're going to buy a house, you need to get with your accountant and with a mortgage professional to understand what you're claiming and why. If you want to buy a house, because you may think you're running your business properly, write all this stuff off. You have no income to qualify. Is it the house or the business? Let us help you navigate that. You need a pro.
Yeah. Well, that's important because
Correct.
there's a lot of companies out there or people saying they make very little because they only pay taxes on what you make.
Correct.
But they make way more, but
That's right.
they're getting tricky.
Yeah. So they got to come to us.
Yeah.
That way we can guide them, get the right program, get the right setup for them.
You're an Arete member.
I am. Arete Syndicate.
The old Arete Syndicate. Isn't there something going on in
Miami.
Florida right now?
Yeah, Miami.
Are you heading there?
No, so I came for this, and then my daughter had soccer in Gatlinburg, so I'll go to the next one that's live. Yeah, that was on my...
Ed and Andy are good dudes.
Good dudes. That group alone, I will tell you, has helped me level up. The connections I've made, the people that I'm associated with now. That group is real deal people.
Oh, yeah.
Investing in themselves and each other.
Oh, yeah. If I was going to join one, that'd be the one I'd join.
Heck yeah.
Arete. But they got rid of the bigwig version of it, didn't they?
Well,
like in the very beginning, there was one like 60, 70,000.
Yeah, so they had the live events, though. I mean, they're not cheap. So it weeds out. That's where you get the smaller group. That's why I want to go to the next one. Miami looked awesome. They'll narrow that down.
I know, but they quit doing those big numbers. It's like a monthly fee.
Correct.
And then you pay for the lives? Is that
correct?
what
It's
they did?
Separate. Yes, if you go to the lives, get a ton of swag. You get the one-on-one time. You get smaller groups, and they have special guest speakers come in.
Good ones, too.
Good ones, man.
Interesting.
Some of the best. We would all know them, right?
What about Kind Lending? Is that a competitor?
Kind
Lending.
Don't know.
That's Glenn Stearns' new company.
Is it really? So we don't run up against them.
Well, they're just getting it going.
Yeah.
But you remember Glenn Stearns?
I do, yeah.
He had a huge mortgage company called he sold it for like shit tons of money.
So it wasn't Stearns itself, because there was Stearns.
It might have been Stearns.
It might have been. Yeah, if that's the same Glenn, it could have been.
And then someone bought it?
Yeah, there's been several acquisitions over the past few years.
Blackstone.
Blackstone. So that's the same one.
Stearns Lending?
Yeah.
Was that a competitor?
They were. Some markets.
What about right now? Only Rocket?
Rocket's the biggest one. You got a few others that are
Isn't
in there.
Lending Tree, even though it's a different service?
So Lending Tree is going to have lenders like us and Rocket and some others.
So they refer you leads.
They would. Yeah, we purchase those leads. Then that comes into our team, and our job is to convert that customer from an online lead to a customer.
So it's just running leads.
Well, that, and you have relationships, like you mentioned, Tommy. We have relationships in every market. Not just we have home builder joint ventures. So some of the big home builders, we're the number one new construction lender that's not owned by the builder. Right? Because some builders own their own mortgage company, but we're the number one that's not owned by a builder. So if somebody's buying a new home, they typically will come through us. Different reasons. Long-term rate locks. They know us. We're in all the markets. We're local. They'll find their way over.
What would you tell the bomb squad that are listening if you want to help some fools?
So as far as the mortgage business has been the best business I have found, regardless what your education was, if you have a hunger and a drive and you're willing to learn, like you're coachable, it's a career builder that I found like nowhere else, like not in any other industry. Can you make great money, but you can also actually do good work, help people buying a home. Like COVID taught us anything, was that home is where a lot is your security, your financial, just thoughts about yourself and your family's there. So we have home is everything as a tagline. If I was somebody listening, I say, man, I would get with Brian and a company like loanDepot to learn and to be around great producers and leadership so I can build a career. Because maybe one day they'll be sitting in my spot or above me, right? You can do it. So
hit them in the DM, folks, if you guys want. You don't take everybody, but you're willing to weed through some people.
We'll weed through. We'll talk to them.
Folks, at the Brian Covey, if you want to freaking switch careers, find yourself in a couple $100,000 a year job plus. That's the biggest thing with these guys, man. I get hit up all the time by college kids. They're saying, what should I go in?
Yeah.
Well, right now, solar's kicking ass.
Yeah.
You know, financial services, mortgages. Yeah. See, I'm learning new shit every day. There's just so many people out there not making over 80 grand.
They're stuck. They don't know where to go with it.
Yeah.
You can build a career.
Don't get stuck in the, well, I don't want to say stuck in the car business because it served me well, but it didn't go anywhere unless you became a dealer.
Right.
This is something that you could, open up your own agency pretty quick, no? Are you a 1099 guy from day one?
No, we're W-2'd. Some are 1099. We're W-2'd.
All loanDepot?
Mm-hmm.
Really?
Yeah.
So you're employees almost.
Correct.
You are actually.
And then that's what's unique about us.
So if I come on board, I'm still a W-2 employee?
You are. There's advantages to that too. As far as, it's a whole other thing, but if you have a great accountant, you'll figure out like there's advantages and disadvantages going both ways.
Oh, but as a W-2, like you can tell me when to come and when to go and all that.
So loan officers don't have that same. If you're on salaried, yes, but they're not salaried as loan officers. So they're commission based. So they're not any more like clock in, clock out kind of stuff there. I mean, they're paid based on what they produce.
Period.
That's it.
It's funny that they're W-2s then.
Isn't it interesting? I'm sure it's something with the way the company's set up. Mm-hmm. Yeah, and it's common in our industry. Some are 1099, some are W-2'd, depending on what company you go to.
Interesting.
Yeah.
If Albert were here, would he be saying, come to me?
Maybe he would. What's interesting is outside of Rocket being 10% share, we're probably narrowing in on that 5%. It is fragmented. You can go all these different paths.
But aren't you guys all getting the same money from the same lenders?
No. So like we'll lend out some of our own money, and then you got Fannie and Freddie and Ginnie and all these like
you
secondary.
You don't use any of those?
So we do. We'll sell direct to some of them and retain servicing. So it's similar money, but what I would tell you is it depends on how they're set up and their structure of what are they actually going to quote? What are their expertise? And it's back to, can you get to the customer first? That's the game right now. Because if I get there before you do and I provide great solutions, you're not calling the next lender. That's the challenge. That's why national branding and building your personal brand matters today. Because if you can't get in front of them, you don't get a shot.
Should one do that right now? What's the number one way to do that?
So I've gone, if you look at Instagram, and started sharing things non-mortgage related. Because what I've realized is people are going to connect up with me either through my kids, my soccer experience, music, all that. And I'm trying to provide education and some entertainment there. So they're going to think of me when they think of mortgage. And that's the way that you bring somebody in, is start to share what you're doing. But you got to show up on social. You got to have a website built, right? If you don't have those things, You can't be the secret agent living over here. I'm not gonna go to loanDepot and start searching for loan officers. Probably.
Yeah.
That's not how they land with us.
Folks, you heard him, Brian Covey. Appreciate you coming in.
It's been awesome.
Flying all the way here. You got your own country band with you.
Oh man, you got to coming from Nashville.
If you guys haven't heard Golden West, you guys better go check them out. Up and comers, the big up and comers, folks. As always, share this out. Go rate the podcast so we get higher up the rankings. Go check out Brian Covey at briancovey.com. Brian, appreciate you coming in. Go get his book, Conversations with Covey, and as always, keep it real.
Dropping bombs with the real Bradley. Subscribe now.